We've got an interesting night. We have tomorrow off to think about what we're going to do. So here's a little miniature picture of the year we just had. It's 2023. Happy New Year, if you didn't realize it. 2023 already. This whole year, this whole downtrend has come to a close. And now we're in a new year. We're in a new cycle. We're in a new session. Most importantly, we're in a new tax year. So people are going to be adjusting positions. The question is, where are they going to go? What's going to be the new thing that everybody wants to get into? There's always something. Every year, there's all these funds that try to get into these select few things, and then everything else goes by the wayside, and it all kind of either catches up or gets knocked down. But since it's a new tax year and it's a chance for people to actually change, what are we going to see? And when are we going to see it? Because some people will do it right as the year switches over. Other people need to wait a certain amount of time because it's a legal year, a full year, that you have to hold these things before you can sell to get the capital gains tax. Maybe more or less on certain things. It's different. Plus there's new tax rules. Here you go. I think there are going to be new tax rules that come into effect this year, which affect everybody. I think there's going to be more coming up. There's just so much going on right now that it's hard to kind of figure out what to do. You know, it's like you think about everything that's going on and all the craziness and you think, what should I do about this? I don't know. That's kind of what I'm looking at. It's a new year. I'm not trying to go into it with a solid plan like I always do. Like, okay, I'm going to do this and this and this. Like, no, I actually have a pretty solid plan. I'm just going to kind of stick to what I have, but adjust it a little bit. We've got the standard deviation channels going, and you can see this is 2021. It was very smooth. The trouble doesn't even look that bad compared to what we have now. But this year was full of turmoil. It was nothing but ups and downs. It was high volatility. So when people say, oh, what's volatility? And you just kind of think about the market going down. No, it's not going down. It's talking about like how crazy it is when it moves up and down. Like it's always moving up and down. If you go across the chart, there's always red, there's always green. Even in these big crazy down, like here was the pandemic drop, one of the craziest drops we've ever experienced in the stock market. And look, it's green. Boop, 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 boop. Few greens right here, some red. They come down. At some point, there's a bounce. There's a point where people think, oh, I think it's over. No, it's just the natural cycle of buyers and sellers adjusting to the right price. And you get this as a result. So we had a crazy year. We had high volatility. So this is what they talk about when they're saying high volatility. These candles are much larger than these. There's tiny little green candles, tiny little red candles. The fluctuations aren't that much. And it's the same sentiment. Oh, we went below VWAP for a little while. We shot right back up. That's kind of what happens. But here, look at this. VWAP is crazier. This was, I mean, if you look at VWAP on this year, it's kind of hard to see because everything's sort of gray, but it was pretty straight most of the time, except for these big drops. And this year, it's just this big winding crazy mess. So it's really hard to trust VWAP. But what I do like about VWAP is over time, everything kind of does revolve around it. I mean, there's never a time where it doesn't. Eventually, because it adjusts or the candles adjusts. One or the other has to happen. This year was crazy. And the last part of the year was this mess. And look at where we are. We're right in the middle of it. You know, it's perfect. Like you could have written this. We're right in the middle of this area where everything went crazy. But that shows you this is an area of support on a larger time frame. Like if I change this from days to weeks here, I mean, you can see back in time, we're still up quite a bit. And in this section right here, this big zigzag, let's say it was in May, and it's been jumping up and down around this price ever since. And we're getting the same rhetoric. We're getting the same outlook. Everything's kind of scaled down a little bit because the summary of economic projections has increased the maximum rate, actually, that they're projecting they'll go. Of course, they could go above this at any time, but they have kind of a range, and they've just extended the range a little bit. So to make up for that, all these funds and everybody else that's trading, they have to adjust their average of what they think the market's going to make as a whole. They're looking at everything and thinking like, all right, what's this actually going to produce so I don't overbuy or oversell this stock? Because right now, this market is full of opportunities. You have a chance to go either direction, really, because we have so much volatility that I think we're going to have more. I don't necessarily think we're done with this downtrend, but I do think we have the possibility of having a decent rally soon because there's a lot of stuff in the works. Like, for example, all the downgrading that went on is going to have to come to fruition. At some point, earnings are going to come up, and we're going to see, okay, were these downgrades across the board over and over again last year worth it? Did it actually produce, or are we actually at that level? Because if we're above that, then the market could shoot up because of that. That's the bullish scenario. If reality shows that things are not coming down and the projections went down, then the market will be out of sync with the actual value. So they'll have to take that into account, and it'll pop up. But what I'm kind of thinking is we have this huge zigzag pattern, and we're going around these standard deviation lines. And what's funny is also some of the lines that I drew a few weeks ago, just messing around, I put lines where the heaviest volume was across, I think, 3 or 4 different spaces. And we've basically been trading in those channels. If we go into one, we stay in it for a while and then dump right down into the other. It's a big move, and then it stays right in there. And they're trading in a straight line with those channels. That's why I drew them. I was just kind of pointing out where it is, but looking at it now, you can see why it does that. It's like dancing around a black hole or something like that. And that's what the market's been doing. It's just dancing around this entire chart. I like the standard deviation lines. You can see we kind of bounced off them a little, but they don't really matter as much to me in this sense, because what matters more to me is the volume. I put the lines right here at the volume spikes, one there, but we've been dancing in this one, in the area of this one right here. It's just been up and down over this point because this is where the most people got in or out. So I'm seeing this and I'm thinking, okay, why wouldn't this go lower if the fundamentals are saying go lower? It's kind of hitting this and it's almost looking like support. I wouldn't say any kind of permanent support, but the reason it looks like that is because we have so many trades here and we're starting to get inefficiencies between the individual stocks themselves and the overall market pressure. So the algos that are looking at everything are buying and selling individual stocks to match what's going on with the overall market. And the overall market is just collections of stocks all put together as kind of an average. And that's what it's floating around. And we have this huge area of volume where everything kind of gets sucked in, and the price of certain stocks is disagreeing with what the market is forcing that stock to go to. So it's not just like the market lifts everything because they're buying those stocks, but as they sell those individual stocks, they become out of sync with their actual value. So you might have a business that's valued at $500 million, and then the stock could drop lower than that, and the stock value's at like 300. Well, if it's still physically worth $500 million, then you have a profit margin in that stock you could buy, because it would at least be worth what the company is actually worth, because it's usually that plus the dream. It's value plus dream. That's basically how you value a stock. It's like, how come you can't pinpoint why you value a stock? Well, that's why, because it's a dream. You think of, oh, I wish it was all this stuff, or you put all this stuff on it because you see some balance sheet. Now, it's just a company. It's doing its best. And that's what everything's doing here. So individual stocks are being bought and sold differently than they should be. So I'm looking at that, and I'm thinking that's why we keep dancing around this level, because there are certain stocks that want to take us lower and should take us lower. But there are other stocks that have been unfairly punished that are way below their fair value. So they're being bought up and they're kind of lifting the markets. So I don't necessarily think we're going to have this crazy drop anytime soon, which we could. I don't know. There's some people predicting that. But I think because we have all this volume here, that's why we're sort of consolidating. We have to solve this problem before we can go higher or lower. This is where everybody is sort of agreeing at the moment. This is the range everything should be valued in. Over time, that's going to change. But for right now, this is sort of what's going on because people are unsure about what happened. The last 2 weeks were basically sideways. See, look at that. Very flat, right? They had some crazy ups and some crazy downs, but they closed right around the same place. And that's where we are now. Everything is just sort of flat. And we won't know till tomorrow what's going to happen with that. So tomorrow is the new year. It's the new trading cycle. I don't know where everything's going to go. I mean, we had quadruple witching on Friday, and that wasn't even that crazy. At the end of the day, there was a big pump. So that taught me, okay, there are some short sellers that are in there trying to get out real quick. And there are probably some people buying in for the beginning of the year, because there are a lot of people that do think there's going to be a bounce, which is another reason why I don't necessarily know if there's going to be a bounce right away, because so many people want this bounce. I think they're positioning themselves for it, but they're not going to put their energy into creating it, which is what needs to happen. The public needs to put its energy into creating some sort of move that you can ride. If everyone's just sitting there waiting for the move and nobody starts it, it's like that dance where everybody's on the walls and nobody dances because nobody will initiate. And that's what I think is going on with this, is everybody's sort of agreeing like, all right, we don't know what to do. We're just going to wait and see what happens. Somebody's going to come out and make something happen because it's a new year. It's a chance to do that. And there's a lot of expectation. And the bulls might come in, try to pop it up. The bears might come in, try to bring it down. People, I really don't know. I think at some point we are going to have a rally because prices are going to be out of sync with what's happening. We're already closer to what that level would be, in my opinion, because I keep hearing people say the same thing. They say, we haven't bottomed yet, but I think we're close. It's not like I have no idea how far it could fall. I mean, there's always those people, but most of the time it's, I think it could fall more, but I think we're close. So people are getting ready for a bounce like that. People are positioning themselves to take off, which may or may not be a good idea if things actually happen. But the fact that it's not going that much lower quickly makes me think that I don't know if this is going to be as straightforward as an up or a down movement. I think we're going to have a lot of sideways trading. I think we're going to have trends up or down, but most of the action is going to be sideways because people are so uncertain. It's like, have we gotten to the level yet? I mean, they raised the projections, but that doesn't necessarily mean the economy is going to do what they project. It's all just guessing at this point. So if we move forward and things are completely different, none of that will have mattered. The market will adjust itself to not that point, but a point in the future based on that point. And right now we don't have as much of an idea because things haven't started. If there's no panic or elation right when things get going, I think that will tell people that maybe things are a little bit more mild than we were expecting, although I don't think they're going to be. But that could make people feel safe enough to start jumping in. And it really depends. Or getting out or whatever. I really don't know. Because look at this. It's almost like an even flow, whichever direction it's going, and it's going very evenly. And it turns around and stays at these levels. It has these nice big drops and it comes up very evenly. And over time, we've been trending down. That's the whole year. How many down years do we have in recent history? Not very many. I mean, if you look at each one of these lines as a year, it's mostly up. You can come to these years, there's some down years here, like 2008, and then it's pretty much up, except for, well, this year. And 2018, that one was down, and 2015 was down. So a few down years, and everything else has been up. So I expect even if we have continued downward movement, if things correct themselves, or if prices adjust to whatever the new terms of the market are, we can have a rally starting again. I mean, we can have a bull market starting because the question is, when do these things start? Everything is still being kept bottled up because we need to get inflation down. So the mechanisms to expand are there. They're just kind of being squeezed at the moment because we need to make sure that inflation doesn't get out of control first. Because there's a responsible way to pump money into the economy. That's the whole 2% thing. And then there's the crazy way, which is what we have because we had so much stimulus and we had so much stoppage and we had all this craziness. We had the perfect storm for what we have now. And that happens sometimes. That's why we have these 2008 drops. So we have these .com crashes. You go back as far as you can. This only goes to the 90s, but you go back farther, you have the 87 continuation. Right? You have inflation in the 70s. They had very similar problems. It's not exactly the same because things are actually quite different today, but on a simple level, they're similar. So you can see that things kind of do repeat, and we have these high volatility moments that change, that kind of, I call it level change, right? It's very simple. When you see a stock that is no longer even being affected by the level it was at before, that's a level change. Like you wake up in the morning, it's gapped up, gapped down, something like that. That's a level change. No matter how high or low it goes on that one day, it's not going to come back to the place that it was before. So we have to have some kind of a down to have the force to be shot up. And that's not just like some woo-woo talk. That's actually people getting into position. People that want to own the stock long term need people out, need the prices to come down so they can get in at a reasonable level and still make money over time. That's why long-term investing works, because the gamblers come in when things are high, they inflate it even more. You have a chance to make money then if you were getting in at the responsible time. But then at some point it crashes because they have to get out, and the people that collect it are the ones that live through the pain. People like us, people that just sit there and buy as it keeps going lower and just not using a ton of your money because you know that things are going to be bad for a while. But when things turn around, buying and holding is a great strategy, especially if you have it set to a regular schedule. So it's done automatically. That seems to be one of the best ways to go because sometimes our emotional affect how we do things. So this makes sure that the strategy continues over time. And they find more often than not that strategy works. So that's why these years are great. I loved this year. It was very hard to see everything drop. It still hurts. You know, I'm thinking like a third of my long accounts are gone now at this point because if you look at this, I mean, if you're getting in these lower levels, this is the area I was originally getting into everything was like in all this mess, right? So this is kind of my level. This stayed for a couple of years. Even though it's trending up, it was still around this level for a while. And then we had this massive level change after 2020. And it makes sense that we're kind of coming back to a level that is more supported by reality because this was the never ending up. This was everything. The reason FTX happened is because they did all their stuff during this. If this had kept going, what they did would have been considered genius. That's what people don't understand about this whole thing. Well, I don't know, not the specifics of it, the dumb stuff, but like borrowing money and making your own token and pumping it and all that. Like if that kept going for years and years, those people would have been considered geniuses for doing it. But because it didn't, they didn't have the real world money to pay anything. And that was the whole stipulation. Everything had to keep going up for everything they did to work. And that's the same with any of these companies. It's not like this is new. This has been going on forever. As long as the environment is there to keep the money flowing, those kind of things work because they take on risky investments and make tons of money when things are going well. Because at a high level, if you're taking on massive amounts of risk, that can be worth a lot of money. People will pay a lot to sleep at night. So to take that on when things are going well, it's pretty profitable. But when things come home to roost, like they did in 2008, 2008 and they did in 2020, 2018, you pick your year, it gets brutal. And that's when real change happens in the market, because that's when people actually exit the market that can't be in there anymore. Like they committed securities fraud or something, so they're in jail. So that money that was influencing the market is now somewhere else. It's under some other supervision. So there's a different mentality behind it. There's a different way the market works. Like the market isn't the same thing. People look at it as kind of the same thing over time. It's not. It's the sum of all the people that are in it at the moment, and the way they trade affects how the thing moves. It's the same with all of us. Like everything we're doing is affecting the market in some little way. But at the same time, at the upper echelons of that, the people that move the market, there is a lot of change there too when this kind of stuff happens, because there are people that bet like that. It's not just FTX. There were companies that did stuff like that all over the place, but they weren't as popular. They weren't as in the news, so you didn't hear about it. And it was, it wasn't the same thing. Like the FTX thing was pretty crazy. So there were a lot of companies that weren't quite that crazy. But at the same time, this is what the market is. I mean, at some point, I don't think this is what we're going to see. This is all because we had interest rates at extreme low levels. We had quantitative easing going on. And now we have the opposite. We have extremely expensive money. We have quantitative tightening. They're pumping supply into the market. They're working on the demand, the psyche of people. This is a different environment. The psyche was, oh, we need to get things pumping here. It's an emergency. This drop was insane because we really had a problem on our hands. This was the first time the country just had to shut down voluntarily in who knows how long, if ever. And so the people that owned these positions long term were actually unsure of what to do. Usually they just hold through these things or make the little trades that they need to when they get the information that they need. But in this case, it was so uncertain that things went extremely far down. And because of that, money changed hands, and people that diamond handed this thing made out really well. And I mean, yes, it is coming back a bit, but that's normal. That has to happen. You can't have this thing going forever, or you have these kind of like Weimar Republic. See, that's what people, when they're talking about like, all right, runaway inflation, it happens when you let it get way, way too out of control. If you don't do what the Fed is doing right now, the Fed is trying to bring this down with as little harm as possible. And if people don't think that's the case, it's like, this is political too, man. They want to look good for their ability to stay in power. So yeah, they do want things to get better. They're trying to at least get the market on the right track without destroying anything. They need to bring prices down without hurting the labor market, because the labor market, number one, shouldn't be hurt. Number two, it doesn't look good if you hurt the labor market. So whether that was the case or not, they would not want to look like they're doing that. So they're trying their best not to do that, but they know it's going to be harsh for some companies bringing all this stuff down, because a lot of these companies popped up as a response to this extremeness. It's not just Bitcoin. I mean, Bitcoin benefited from all this. If the market had continued doing what it was doing, then Bitcoin probably wouldn't have had this crazy bounce, because not only did it have the liquidity now with all the money changing hands, it also had the story behind it, the myth that it's been telling the whole time. And I don't mean myth as like it's fake. I mean, this is like the mythos, or this is how it describes itself. So it has merit in this economy, because you could say, listen, money was here, it's now here. And even though Bitcoin went down, we're trying to make it so that doesn't happen. The cryptocurrency market in general, it's not just Bitcoin, it's not just one thing. They're trying to make something stable. They're trying to make a currency that isn't diluted, because decisions you had no part in wreck everything. That's basically what they're trying to do. They're trying to say like, all right, you didn't mess with this. We don't want this to affect you as much. So we're trying to make this better. But at the same time, we have a real world economy. We have so much going on. There's no way you can predict every little piece of the puzzle. You can't think of everything in there. So there's going to be ups and downs to getting this going. I don't know if this is going to go up, if it's going to go down, but I do think the volatility is going to be here for a while. And I do think we have another pump coming in sometime in the near future, because number one, we just have the reason to. We have this level that it's having trouble getting below. And if it gets too far below it, people start to really buy. And that means that takes the individual stocks even lower, because a lot of money has already been destroyed. So some of it is just stocks changing hands, but some of it is money that's actually left the market because people are bag holding these crazy stocks that have dropped. So as time goes on, the terrible stocks will get crushed because they don't have real world value to hold them up. If you have some kind of real world value, people will migrate to your stock to keep themselves safe. Funds will buy it because it'll help keep them safe. Not everybody in the market is trading and being crazy. Like, there are a lot of people that are trying to be responsible with everything. And that's what you eventually get as the market drops. The more responsible people are the ones holding the shares, so you get less and less movement out of them. And as things continue to drop, You'll see certain stocks that, yeah, they're going to go lower because they're moving on the day. They're just the microcurrents, I guess, are pushing them around. But the pressure isn't letting it drop below where it is very much. Like, for example, 23andMe, I've been watching forever. It stays in the twos. It's been going down to the low twos. And it's like, no matter how low the stock market goes, it only drops a little bit. It's already so cheap. It's hard to push that stock down more. And if it goes down more, that's totally fine with me. When you see stuff like that, it's telling me that there's a disagreement on what these things are worth, what people believe these things are worth. Because if they think it's worth more than it is, they're going to buy it up. And people with knowledge, people with money are eventually going to find those things as the crappy ones dry up and get delisted. There's so many different ways that the market could change. And over time, stuff like this actually is beneficial because it's like cutting the weeds. You know, if you let everything get overgrown, the plants you want aren't going to be able to grow. So you cut everything down, you give the plants you want some space, and they can start to come up. And that's kind of what happens in these markets. But the problem is that's not an easy process. And the more time goes on, the more it's going to hurt people that have been doing the right thing, but are just being affected by the slowdown in business in general. Which we will have to some degree because we keep seeing it. We keep seeing layoffs, which means that divisions are closing, that machinery is powering down, we're using less, we're creating less. So there should be some sort of slowdown in the numbers to indicate that. If we don't get that slowdown, that will tell you that inflation is still hot. And that's the one thing I think people are, well, not the one thing, that's one of the things people are worried about, is that, let's say there's so many different ways that we could have, there's so many different problems we could have. So what if inflation is so entrenched that we can't move it down based on all the activity that's going on? That would cause the market to drop in fear. But at a certain time, inflation is good for the stock market. So it would bounce at some point, unless, we have total societal collapse, which that could always happen. But at the same time, look, if you bet on that, that's not usually a winning bet. So it's probably better not to at this point. Although you never know, could be wrong. But long term, I'm looking at the standard deviation chart. And what I like is it's bouncing around at a level that seems reasonable. It's bouncing around at one standard deviation. So the mean says it should be down here by this little volume drop, somewhere in the low 300s. That's where the standard deviation value is based on the trading of the stock on the weekly time frame. And you got to think most people are in this stock way, way lower. So a lot of people that are holding it don't even care. This is nothing. Like, look at the amount of volume you have here in the last couple of years. This is all the last 2 years right here. It's nothing compared to what you have down here. So, I mean, this is how much movement the smaller entities can actually create. And this is how much movement the market can create on its own. So you see the good companies in here getting crushed more and more. And that's why I think there's disagreement, because we're having buying on top of the selling. So we're having serious selling in certain stocks. Like, if you're only watching the really, really bad stocks, you would have no idea why the market is still up the way it is. You'd have absolutely no clue why everything's still going, because everything's dropping 70%. No, not everything. There are things going up. On those horrible days, I set my stuff to high and low, and I just see what's up and what's down on the day. That's one of my daily things. Like, wake up, get your day going, do whatever you have to do until you get into the markets. And once you get into the markets, look at what's up and what's down, and then look at why. Just kind of get a picture of the market before you go in and look at the news, because I found that if you look at the news right away, whatever you see first kind of shapes the way you look at everything else, and your thought process also shapes that. So if you're going in with a negative thought process, then you're going to see everything is all negative. But if you just look at the charts real quick and you think, okay, this is up, this is down, let's think about why. It seems to be a little easier to get a grasp on those situations. I don't know why. That's what it seems like since I've been doing this, because what I'm trying to do every day is just figure out what's going on and see if I want to make any moves based on my position or based on things I've been waiting for. And that sometimes that takes a while, sometimes it's pretty quick, but most of the time I find that I'm not doing much, or I'm making little moves. So when this was going on, I had a lot to do. This has been the busiest year I've ever had. I mean, I still think there's more downside, but if there's not, I would not be surprised at all, because look at how this actually looks if you back things up. I mean, we had a big jump here last year. That was early on when everything went crazy. In fact, I think this was like the madness that happened after GameStop and everything else that followed, because GameStop was kind of the catalyst for the entire market to just explode. Even though it had been going up for a while, that GameStop thing pushed everything to another level, because you see these green pumps, and you'll see like a huge pump, and then it's uncertain for a while because things were so unnaturally high that people were afraid to do anything. But then it would pump again because there were so many shorts getting squeezed. This is the end every single time. But now they're right. Now they were absolutely right in 2022. If you bet short, you're up. Although it's more complicated than that, and I'm sure a lot of people that tried to do that didn't work so well, because that's why we had these wild swings. If you bet down at the wrong time, you got absolutely demolished. So that it was a really difficult year for everybody. That's why I like my long strategy. Just buy the long stuff and think about, okay, if this is a nice record down, this is a day to buy. That's how I knew when those days that hurt the most. I remember thinking, on these kind of days down here, there were a couple of weeks where things were really low. And the first time when it happened in May, June, somewhere around there, that was painful. But I thought, okay, when it's this painful, those are the days to buy. And I usually find that those days that feel like bottoms where I buy just a little bit, not as much as I want, obviously, but just enough to be like, okay, this is how I'm going to solve the pain. I'm just going to get a little bit of this here. And remind myself why I'm doing this. Because when the thing bounces, those are the days you're going to say, man, you fantasize about putting everything you had on it on a little point, right? Because you just knew it was going up or whatever. So just doing something and just saying, this is why I do it, because these are the days that I'm going to wish that I bought some. I mean, right now, you'd still be up from that point. So when I bought on this week, I guess, or because are these weekly candles? Yeah, this is a weekly candle. So on this week towards the low, so I was buying in there, and I'm still technically up even after the down couple of weeks that we've had, or I guess just say down month. Look at that. It's red every single week up until now. And we'll see what happens tomorrow, but that's settled at this middle area just below the massive volume spike. So I'm not surprised, man. This is what I was thinking. In fact, the last broadcast I had, I said, we could have a Santa Claus rally. We could have a crash. I do think that there's going to be a rally, but obviously that didn't happen. But I said that but my gut was telling me the main thing I thought was going to happen was sideways trading. I thought we were going to have these things that look like they're ups and downs, but then we end up somewhere in the middle. And I was right. I expected just that to be the first week. Like the week before Christmas, I kind of thought that was going to be the week that goes sideways like that. And then after Christmas, we may have a rally because of the lower volume, because of all, the million reasons you've heard over and over again. And we still technically have 2 days on that Santa Claus rally. So even though I've written it off in my mind, mostly because I'm frustrated that I didn't get that nice jump, which would have been great. It's also just, it seems unlikely with the way the market has been trading. I think people are a little bit too scared to get going on this rally still. And I think that's because we haven't quite settled that this is the point. Is this the actual point that everybody considers fair value because we've been trading around it for so long and because there's a lot of volume there? Not necessarily. That's because we were up here and thinking it was going higher. So now we have to adjust our expectations until we can get to a platform and start taking off again in the future, whenever that's going to be. My guess would be sometime coming up in the next couple of months. I would think earlier in the year we'd have a little bit of a pump because we've had some negativity, because we have some reasons to get some of that out of the system. And then we're going to hit a wall because the economic reality of the things that are happening, that's what's going to come to fruition. The fact that we actually have problems in the economy caused by the Fed. It's hard to figure out how to phrase that, but that's basically what it is. We're trying to cause problems that we can solve later by turning the money spigot back on. What they're trying to do is crush everything so that when we get going again, it's a happy get going. It's not we're scared that this is going to be overpowered. It's we need to get going, so we need to pump as much as we can in there. We can relax again. The money printer can go burr and everybody's happy. So we need to get to those, well, not, you don't want to be printing money all the time, but the points where it's not so bad and a little bit of it actually helps, and we're thinking of like, oh no, who cares about inflation? Those are the times when we're going to keep going up, because those are the good times. The 2% inflation times. I remember before this happened, they were trying to get inflation above 2%. The problem was it wasn't coming in high enough. That's what's so funny about all this. It's been nothing but inflation for like the past 2 years, or year and a half, I should say. Maybe even less than that. But before that, it was, we need to get inflation up. Well, you did. So here you go. Congratulations. I think you got it up a little bit too high. So now it has to come down and correct itself. And of course, the Fed decided that was about when they were going to start dumping their stocks, over in this mess at the end of the year. Fed says, okay, we're done. And then this happens. What do you know? So my thought is, when they start to say like, hey, I think we're going to buy in again, that might be a good time to start thinking about buying some stocks. But we'll see. If you don't know about that until well after it's happened, because that's illegal for everyone else to do. But for them, it's totally fine. whatever. It's how the system works. You have to get it to go some way, right? So until then, how do we take advantage of that? Well, you stick to your strategies. You don't do what I did a couple of weeks ago and don't try to take the difficult route to get a prize that's like 2% better than what you already have, or 0.1% better than what you have. Just take a look at the risk and what the cost is to get that, and go just to that. Don't worry about going beyond to make a little bit more, because eventually you're going to get hit. And if you keep risking more and more to make less and less, that's not a strategy for success, which this year should have taught people, because people that were reckless got crushed. Me, yeah, I had some good trades, some bad trades, and at the end of the year, I think most of my bad trades were towards the end of the year, but most of the year I was hitting everything just right because it was actually flowing well. Like the upward pumps were stable, the downward pumps were stable. We were getting these oversold conditions, easily pumping up, but still coming back down. So this part of the year was great, And then in this, there's this nice pump here and all these different directions that you could have made a good amount of money. But the end of the year, these last couple of, I would say from here, let's see. Yeah, from about September, October, somewhere in there on, it started to get a little bit more difficult. So I don't know how this is going to happen at the beginning of this year. I mean, it's a brand new cycle and anything could happen. I'm guessing sideways action for a little bit until something triggers the market. And that's what we also have to have. We also have to have some kind of new news, because there's always eventually something. The news cycle just continues. So it's not like we're just going to stop and nothing's going to move. So what are we going to get that's going to pump things up or down? I'm ready for either direction, because if it goes down more, then I'm going to continue my buying. That's just what I do. I will buy this thing into the ground. I will literally go down with the ship. And that's just me. Everybody needs to figure out their own way of doing this. Like, I don't give financial advice. That's all on you. You have to figure out what works best for you and make sure that your risk tolerance is adequate as well. Because some people try to trade above their risk tolerance because they want to get somewhere quicker. And that is not the way to go, because if you get crushed once doing that, then it's over. So you don't want to do that. You want to continue playing. Even though it sucks being in the game for a while, it's nice to slowly rise with the tide and get how the thing moves, because eventually you start seeing these things that are obvious. There are very rare occurrences that everyone, even the early investors, can see, but they don't happen very often because we have so much other stuff going on. So if you just wait for those ones and trade them well, you can do well. It's minimizing the amount of trading. That's what I've realized. It's just minimizing the amount of trading you do until the right trade comes up, because most of that stuff is not going to go as well. If you have a trade that you believe in 80%, that's probably not going to go well, but you're going to do it anyway because it feels good enough and you need a trade and you're also not using a ton of money. So why not do it? But that's going to happen. So if you can stay away from those trades until you find the ones that are obvious, the ones that look good, you can just save yourself from losses. And even if you're not making as much, having no losses will move you so much farther. I don't think people realize how much their losses hold them back. Even if you're making progress, those losses are just pulling you down every single time. And it's hard psychologically. It's hard on the pocketbook, but at the same time, that's how you have to learn. It's the tuition, as some people have said over and over again, actually. Anyway, we've got this downward market. We've got a chance to do something different. We're kind of at a high volume area, so I think trading around this area seems likely until something moves the stock in a different direction. And if it's down, which I do think is possible, we don't have a whole lot of resistance here. We have quick movements in the past, so I can see this thing falling a lot quicker than we're expecting at some points if it does go down. But at the same time, the individual stocks, like I said, are starting to be way, way underpriced. So really good stocks are getting to a point where people that are afraid don't mind buying because the downside is just so little. I mean, there's some stocks that I bought that have gone down in the cents, and it's been like, no big deal. I'm used to these things going down dollars or $10 at a time. Oh, that's just another day. But these when it can't move or it goes down, 3 or 4 cents, and that's a bad day. That's really nice. It's makes it look like we're getting to a place where it's going to be harder to fall. And that's what we want. That's what support and resistance actually looks like. If you're looking at it at a grand timeline, you're going to see that these areas are areas that just compress all the buyers and sellers because of the crazy action. So we've had crazy action here before. We've had crazy action down here before, which means we could easily fall if we go down. Now, if we go up, we do have some resistance because there are a lot of people that bought in up here. I mean, look at this whole section right here. Towards the top, there are a lot of people that are underwater. These are all new. Well, not all new, but mostly new people that are buying in up here. And there are people that are waiting for this to come back. And if you look at this, there's kind of an area, if I put the cursor right here, that things bounce off of in both directions. Like here, it kind of bounced off as it was coming up. And then it came and bounced off again here. And as it was coming back, look where it bounced off, the same area. So there are areas that the stock will frequently move quickly beyond because either one, it's low volume, or one, it's a unanimous decision that this is not the pricing for this stock, which does happen a lot. There are times where things move so quickly because there's a quick repricing and the algos all react to each other, and then the pundits on TV start talking about it. So you get these reactions that move things to these different levels and move them through them quickly. So we see these areas as being areas where that happens. Quick turnarounds, high volume areas, that's where you're going to see things. And in fact, I can see the lines now. So the monitor I'm on is going a little bit. So I think that it's easier to see it on the recording than it is live here. But there should be 1, 2, 3 lines as the areas that you would see the stock going to when there's uncertainty, which is where we are right now. And it trades on top and below these lines, which is really interesting. So let me actually minimize that real quick. And then we're going to make this one restore here. So here is the last few days. Actually, this is quite a while. This is a few weeks. So we had last week basically went in a straight line. This is what I was thinking. We went in a straight line for most of the week, and we ended right in the middle of that. All right, but look at this. Here's one of those volume lines. We kind of came up and danced around that. But before that point, we were doing the same thing on the other side. It would come down to it and bounce off. It would hit the bottom and bounce off. So this, until it crashed through it, then it became somewhat of a resistance. Even though it's not hitting that perfectly, this is just showing you the general area. And you can see this general area has these long open days where you'll see gap ups, gap downs, in this case, gap downs, on a scale that actually shows up in the larger charts. So it was interesting to me that we were dancing around those levels. And if you go back, it's still kind of the same thing. I mean, look at these big crashes. It went just a little bit above it before it crashed, and it had trouble down here at this one, bounced up to this one, and came right down to this one, and it danced around here until it finally broke through. So, I mean, look at that. It just stayed within these levels. And I just kind of did this as an experiment, but it's been interesting to see how it reacts to these levels. There really is power in the areas where most people get in or out, because that is where people are either making or losing money. I mean, your average is the price that you want, or your average is the price at which you start to become profitable. So that's where you want the stock to go to or above, preferably above. I mean, you always want to be up in your position, but while it's down, it's a chance to buy. And as these things return to these averages that people have, they're somewhat in these areas. And I think that's why they move quickly, because large entities decide, all right, I'm going to get out of this thing because we're up so much, I just have to. That's what this area is. There's just they get out, a bunch of other people get in that are excited about it, and it continues to go until it level changes. So I guess this is what I was talking about earlier when I was saying level changes. If you go from here to here, that is a level change, because there's a bunch of trading within an area, and then there's a quick movement above it to a specified point, which is just really interesting to me. So it's been crazy to watch this. And I don't know, the more I do this, the more I become a fan of technical analysis in ways that I kind of hadn't been, because I was like a little bit hurt by it at first, because I bought into it completely. And then when it didn't work all the time, I got mad at it and hated it. And I just realized after a while that it's just one tool. It's just a piece of the picture that you're putting together. So look at it as one thing. And if it doesn't confirm, but everything else does, that doesn't mean you have to change what you're doing, because one indicator says that. Right. And all of your technical analysis can be considered one indicator, because it's all the same sort of thing. It's just looking at what has happened before and saying, hey, something like this might happen again. That's all it is. And everything else is a way to narrow that down. So just using technical analysis can kind of it can give you a rough idea of where things might be. So if you look at that level right there and think, okay, every time we've had these uptrends and there's uncertainty, I can see downward motion happening afterwards. And that's what we got here. There were news catalysts. There were things going on in the world that just dropped everything, but then there were buyers, and it just was such an interesting week. And it's been an interesting year. We haven't had a bear market in a while, and the bull markets we have had have been insane. So it's good to see something different for a while and actually learn from it and kind of figure out what people are doing, because this is a measure of human behavior. What do people do when these events come up? Well, this is the result of what they do right here. So we're seeing what people are thinking about the next year. It's pure uncertainty. We would not be in this straight line if it wasn't that uncertain. It means some people are confident and feel we're in a good place, And other people just don't know what to do, so they're waiting to see what happens before they react, which means there could be a good amount of firepower later on. And if you look at the volume down here, you can see the last week was not that high compared to the week before, because this is when people were expecting everything to happen. And this right here was the CPI. This was the Fed meeting. This was everything that took place after that. And we had all that hawkish language and very little dovish language. So we got put down here. And this level is the point where people are saying, hey, is this where we're supposed to be right now? You know, this is the first test of this level. I think we're going to move off of it, but I do think that this is going to be a point at which we kind of think for a while, where the traders don't really know which direction it's going to go. So they're going to kind of maybe sell a little, maybe buy a little, but hold tight and until we get something. And that's what we're getting right here. We're getting this wait signal. You know, and it's too bad that the market doesn't open tomorrow. But it's one more day to think about everything. And actually, it's one more day to get people stressed about the market, which could make things move. And that's what I want. I want things to move. Depending on the direction, the direction doesn't matter to me, actually. I have plays to the downside, very few of them, because I've been getting a little bit, I was making too much money to the downside, so I don't want to overdo it. And I've been kind of pulling back a little bit. And also, stuff to the long side is getting really cheap. It's actually extremely reasonable to go look at the 2024s and 2025s. You can find some reasonable areas that there are contracts open, but they're devoid of people that believe in them anymore. It's just the people that are stuck in them. So you can go and you can get these nice, cheap contracts. And if you don't want to pay whatever they're asking, you just put in your price and you wait. And a lot of times you'll get it now. Which, that didn't used to be the case. When things are moving a little bit more, you're not always going to get that, especially if you're wrong on the direction, then you're definitely not going to get it. But during this time, it's been interesting to be able to get these long positions easily, cheaply, and just be able to hold them. When you're looking at contracts that expire in over a year that are worth 10, 15, 20 bucks. So your max risk per contract is 10, 15, 20 bucks. That's amazing. Because those contracts can be worth hundreds, thousands, or tens of thousands of dollars, depending upon how quickly and how much the stock goes up. And obviously, it's not like you're going to get tens of thousands of dollars very easily. That's very unlikely, but that could happen, which is why you don't usually see long-term stocks being priced so cheap. But people don't think the economy is going to be in good enough shape for that point in time to be valuable. People are discounting 2024. They think there's going to be a recession this year, which is going to bring things down and mean we're going to have to be digging out of it over the next year, which that might be true. I think to some extent that's going to be true in certain areas. But what I think is probably going to happen is what it feels like, I should say, is we're going to get some kind of a mixture of things where certain things don't go down that you think would have gone down, but other things will. So you'll have things will be strained, but they won't stop. And certain areas of the economy are going to remain strong, where other areas are going to be the areas that falter. So maybe we get that, maybe we don't. Maybe it's just a whole system-wide thing. I don't know. But to me, it seems like certain areas are just too strong, and that the economic data around those sectors are too strong for it to fall quickly with everything else. But there are certain areas that are definitely more at risk. For example, everything that's in tech right now, that fall could continue to go. I mean, that's been a brutal fall, especially if you own like Tesla. Tesla's been hit. Tesla's just been massacred this year. And I think a lot of that was just the fact that it was up so high. There were so many gamblers in the stock, and gamblers don't like reality. Gamblers are the ones that will eventually sell under enough pain. They won't ride it into the ground. Like the diamond hand investors will ride it into the ground. But the gamblers are eventually going to get out. And this massive drop has provided that opportunity, because the lower it goes, the more of these people are getting out of the stock, because that pain just gets too great. There's so much money in Tesla. It's unbelievable how much of the world owns Tesla. You wouldn't even think. It's not just individual people. It's all these different companies. People were buying stocks in each other's companies to gamble on the 2021 pump, so everything is just so intertwined and complicated that it's difficult. And, if you have Tesla, they've been getting it more than everyone else. I have Tesla. I don't have a lot of it, but I have enough to where it still sucks that I thought I was getting in at great area, great prices, but now it's way below that now. So I'm glad I didn't buy that much. I'm glad I went in very slowly, and I'm still going to go in, because as far as I can tell, it's still the same company. There are going to be issues here and there. Pretty much every year, Tesla finds some way to impress its investors, even if they don't meet delivery, because like deliveries are the number one thing. Do they make deliveries? How many orders do they have? Just the same stuff over and over again. But there might be some other things that people aren't looking at. They can bring to the spotlight and say, hey, look at this. We also did this other stuff too that was actually really good. So you could look at some of that stuff, and you could look at how the stock's tanking right now and think this is what's going to continue. And I think it's possible because it has so much weight to the downside and it has momentum going that way. If the market goes down at all, it's going to get hit worse because it's basically like an open wound that doesn't have a chance to heal yet. And the more you go down, the more that wound is splitting. We're just bleeding dry, and it's hurting because people are getting in really, really late in Tesla. If you think about Tesla, the people that were getting in early were buying in, in the double digits. There was a long range of time where it was trading in the double digits, and eventually it got into the low hundreds. That's kind of where I got involved with it. And as far as I can see from that point in time, because it stayed in the low hundreds for quite a while, that was one of the other big levels for that stock. If you had gotten just a little bit at that point, you'd still be up quite a bit. And if you look at the stock over long term, in fact, let me go to Tesla real quick so we can take a look at it. If you look at it long term, it's getting back to more reasonable levels. You can see, look at this huge, it's a Head and Shoulders. What do you know? His technical analysis has been so right this year. Not all the time, but some of the time. I mean, this was the initial pump that got everything going crazy. So we got 22, 21, 20. Right. So the end of 2019 was when the Tesla pump really started to go, because it had gone up and down so many times that I just didn't pay much attention to it at that point. I thought it goes up and down all the time. But suddenly the thing was worth like $600. Here's where it was in the hundreds, and then boom, suddenly it comes back down, it falls, and we're at this level that we haven't been in a couple of years. And this was after a massive pump, because look at all this green right here. This doesn't look like much, but this green was it going from such a low amount to quite a bit. And then when it came down, I thought, okay, whatever, it's done there. But no, this was the pandemic. So it started from the bottom of the pandemic. That's where it just took off and went insane. And you can see right here, this was another big level change for it. This was later on in the year. I can't see what the date says. It's not on this one. But once this happened, I mean, this is when you knew things were insane, because I got caught up trying to short it in this mess over here where I could have been right, but I got it, I think, during this green pump. The green pump had started, and I think I started getting in a little bit too early. If I had gotten in a week or so later, I probably would have been just fine. But I went one contract cycle too early. And of course, the one after that, because it's an important one, is when things change. And the important contract cycles are the cycles that drive things, which is what we're starting tomorrow. Or not tomorrow, the day after tomorrow. That's why I'm wondering what's going on with this new cycle, because things could change so quickly, especially since there's incentive to. There's a lot of good stocks that are cheap. A lot of crappy stocks are out of the market. We still have some downward trajectory. We have projections downward, so people are expecting down. The question is, how much more can we get rid of so that when we have a pump, the pump is insane for all the good stuff? And that's what you end up getting. You end up getting this consolidation of money where people move to the safe stocks, and then the safe stocks pump more and more as things collect. And eventually you have a bottom to where there's nothing else they can trim off. At some point, things become valued really well in the stock market. Just because the valuations are over the top now, it doesn't mean they always are. At some point, things get closer to where people think, this actually isn't bad. And you get more and more people that want to jump in at that point. So with Tesla, I think we've gotten past these crazy pumps. Because look at this one at the end of 2020. And then there was the 2021 crazy pump at the end of the year. I mean, Tesla just went insane until we finally had this drop. And this drop started, it looks like, a little bit before the end of the year last year. It really was pretty even with where it pumped up to right here, but it still started earlier. So Tesla has been in a decline for a while. People who own this stock have been thinking about it since then. And they're getting these pumps, they're getting these little rays of hope here and there, but it's getting crushed every time. And they're thinking, man, if I just dumped it the last time, I'd be fine right now. I'd be okay with it. I might even buy some. But they're not. They're still in it. So they're thinking they're stupid. They're thinking this is so difficult. They're thinking I've lost so much money, which a lot of people have. And that's unfortunate, because this is an intense stock to own. when you're buying into it during this mess. But what I'm pointing out here is the fact that it's returning to levels before a lot of that was going on. This was a lot of the gambling in Tesla. These massive pumps were short squeezes. These massive pumps were gamblers. We had the environment to start this. When the pandemic closed everything down, Tesla was in the prime spot to get pumped by all these people that were starting to trade and starting to gamble. People that normally wouldn't trade stocks came over from other markets because they were closed. Like people that were going to the casino and spending money there and couldn't go to the casino anymore were moving their money into stocks. And they were telling themselves it was more responsible. It's like, oh, this one, there's all this other stuff, because it is more responsible than going to the casino, because that stuff just drops sometimes. But at this point, owning Tesla is it's very difficult. I understand that. But if you believe in the company, then it's an opportunity to collect as this thing drops. We're still in an area where there was extreme inflation in the price of the stock. Like right here, you can see this was a massive level change, and it kind of sat there for a while. So we have some room to fall there to get to this. But as we start getting through this, we're getting into the better and better ownership of the stock, the people that are in it for the long haul. Okay, so we can see, if I zoom in a little bit, that most people are in Tesla down at this point. And that is actually why I was bringing this up, because the main point of control, which is hard to see on this view, it's unfortunately not as easy to get going as I would like, but you can see this is the point of control. And it hadn't been at this area since the end of 2019 and the beginning of 2020. So basically 2019 through mid 2020, most of the people that got into the stock are in that stock. That's basically the bottom of the pandemic drop, when everything dropped so much that Tesla got dragged down with. Look at the pump that Tesla was in when this happened. It was up every single week for months. Shorts were going crazy trying to get this thing until the pandemic finally brought it down, which gave shorts an opportunity. But you know what it also did? It gave them false hope, because they thought, all right, all this stuff that I've been stuck in is now coming back, and that's where it should be. They weren't thinking that, oh no, this was pumping like crazy and the market brought it down. So once the market lets up, this thing's going to take off. And it did. Look at this. It's riding the moving averages all the way up until it gets to that peak, until everything starts to come down. And where we are now, we're at a point where people are hurting. We are below the median point. Here's the median point. So the median point on the standard deviation channel is $183. And right now we're at 123. So we're quite a bit off from the median point. We're down at about half a standard deviation, or actually just below that. We could easily get down to one standard deviation. In fact, that's where I think a likely price is, because that's where a lot of this pump started. Like, look at the point in 2020 when it went down and came back up. It kind of sat at this level for a while before it took off. So this was the mania. This was probably about the time. This was the GameStop thing. But so even before GameStop, this was just taking off. Crypto was taking off. It was tied to it because they own so much of it, and Elon Musk was pumping it and all that stuff. So you still have all this. You've had a lot of the fluff removed from the stock at this point. I don't necessarily think it's done going lower. I'm not going to stop saying that until we've been going up for a while. So if we get these uptrends and then it keeps going down, I'm prepared for that, because I think that's what's going to continue to happen until the Fed pivots. Now, I talked to somebody that doesn't really believe the Fed matters anymore. They think the system has basically gone in a direction that we can't change now, and it's just going to do what it's going to do. I don't necessarily believe in that. I think the Fed actually does have quite a bit of power, because everything that you see in the main charts reflects what the Fed was doing. Over time, it usually ends up doing what they say, because they're patient and they know what they're doing, and they control the money supply. They control the way it gets into the economy, not just through the actual infrastructure, but through the psyche of people. So as the money moves through the system, you get these moves in popularity of different investments, different things, and Tesla hit the height of that popularity, and now it's at the opposite side, because it has all kinds of problems in the politosphere, not just the actual business itself. And it's mostly the same old tropes too. Oh, other companies are going to come in and they're going to take over the market share. And yeah, that probably is going to happen at some point. I mean, as this thing goes on, companies are going to catch up, and generally they jockey for position as time goes on. So I think at some point, the companies that have way more resources in the car building and distribution sector than Tesla does, just because they've been in it for 100 years. So even though they're not building the same things as Tesla and they have to catch up in the way they do that and catch up in their business model, they still have the physical resources to be able to do that successfully over time. And as people figure these things out, and also as the political turmoil continues and people come in and say, oh, I don't like Tesla anymore because of this dude, right? The people's view on the company has changed because Elon Musk says things that either people like or people are upset by. So that moves the stock and has no bearing on the actual value of the company, but yet it is part of the valuation. So we have to take into account that now that Elon Musk is no longer the dude that everyone loves, he's now the dude that a lot of people don't like, and people are getting rid of their stock just because they don't like him, even if they see value in it. So the way I look at it, it's still the same stock fundamentally, but it has different headwinds now because of this whole thing. And that could be a buying opportunity. If you look at the moving averages, it's significantly below the moving averages. It's below the median point in the standard deviation channel. It's still Tesla. It's still a growing industry. They're not just doing cars. They're doing insurance. They're doing solar. They're doing battery storage. They're trying to get the energy grid thing going. It's this huge, massive project. It's going to take time for all that to come in. And as that time goes on, that might be their advantage. The fact that they're not starting as a car company. They're starting as a company that builds cars but is doing other stuff as well. So even if the other companies like GM and Ford and all them catch up, they still will be car companies. They will have the background. They will have the physical form of a car company because they will own that. Or they will have to get rid of the stuff they had and use that money to do something different. Whereas Tesla is its own thing, so it can morph quicker. You know, it's like basically it's the same thing. It's the younger cell and the older cell. It's just morphing quicker, but at some point, they catch up to each other. There's kind of an even playing field where the market and everyone else dictate what prices are going to be, what products we want, all that stuff. So at some point, there's going to be some fluctuation in the stock based on everything. And I do think it can come back to any of these points. Even if it's not done going down, we're still well above the point of control. We're still well above the point where most people own the stock. And we're in an area where there is a little bit of volume, but it's approaching an extremely low volume area. So if Tesla gets down to this one standard deviation mark, we're at a point where there's basically no one in the stock, which is why it moved so quickly. Not no one in the stock, but no one that had exchanged the stock at this level is willing to do anything. Or they just don't exist because there aren't that many people that did. That's why it zipped right through it. So we could zip right through to the downside, but at that point, we're getting into the massive buyers that believe in the stock. Because these people mostly believe in the stock. They're the ones that got it and have been holding it and are expecting things to change. And if you look at the entire timeline, this is a huge drop in a short amount of time, which means we have a chance to come back, even if it's not a very good stock. There's just so many reasons why it could come back. And if the market continues to go down, it will go down with it. There's nothing that's going to change that. But when things settle, when the market has found a spot where it's comfortable not going down anymore, this stock will bounce like crazy. Because the gamblers will have been chased out of it. The fair weather fans will have been chased out of it. And the supply will be ready to be delivered to people that are getting back in as the fad increases. As the popularity of stocks in general comes back, or just any financial instrument, there are just so many things that people hate right now that they're not looking at stocks because they don't like stocks as an asset class. They don't like crypto as an asset class. I like everything. And during these times, this is when we are supposed to look at these charts. This is when we're supposed to grit our teeth and buy. Because look at how much trading has gone on in the stock. How often does this happen right here? How often do you get this much of a drop this quickly? Very rarely. And what's different about Tesla from here and here? That's the other question I ask people. What's actually different between these 2 points? They're still producing the same cars. They're trying to continue to ramp things up. Production looks like it's going to increase in the future. So they're actually way undervalued for what it looks like they could be doing. And that doesn't mean it should be valued at that point. It will be looked at through the lens of that point plus what it could do in the future. And it still has so much extrinsic value. If you're trading in options, that's what you're looking at. Intrinsic and extrinsic value. Intrinsic is what is the thing physically worth if you were to turn it into cash right now. Extrinsic is what could it be worth over the timeline of the instrument. So if you have a lot of extrinsic value, which I think this stock does right now, we have way more upside than we have downside the farther it goes down. If it gets into this point, which is actually really low, because I mean, look at the price here. It's $15, $17, $20. I mean, this is because everything it's been adjusted for the splits. You know, I'm looking at this stock in so many different aspects, because before the split, this thing went up to like $2,400. So to me, this is a stock that I've seen go up really high, and then it went up to the thousands again from the low hundreds. So it split here one more time. So this stock to me is, I like seeing the range that a stock gets into and being able to identify where it is based on that. But the splits make it different, because the chart looks the same, but the numbers in your head throw you off. They're different numbers. So it's so difficult to see what's going on. Because at one point, this 12 was not 12. This 12 was significantly more. That's why it looks like, oh, these people bought in real cheap. No, they didn't. They bought in the double digits and low triple digits, I should say. But that got compressed down into this area. That's why you see a bunch of buys up in here, and then you see the most of the buys down in here. And a lot of these are people that were early on in the company and stuff like that. But as you can see, we're just at an area that we could go either way. If we go up, there's a little bit of traffic here. So going up might be slower than going down in this stock, which at this point is actually telling, because there are a lot of stocks that, like I was saying earlier, are getting to a point where they're too cheap for certain buyers to let them go. So they have a little bit of support. And some stocks don't have that at all. And I think Tesla's one of those stocks. People want out of this stock so bad, not only because there's everything going on with it in the politosphere and the media and all that, but just because it's gone down so much that it's scaring them. Thinking about how much they've already lost, how much they could lose. And every single point, they were thinking, I should sell. I should sell when it went down here. I should sell down here. I should sell. And then it pumped a little bit and they're okay, right? But down here, oh, I knew I should have sold. I'm so dumb. I knew it. Yay. Oh, what's going on? It's cool. Ah, that's fine. What are we doing down here again? What's going on? I can't do this. I'm out. That's what happens. This is pain right here. This is where a lot of people got crushed, because you could see this was the big start of it. So we had all this motion right here. We had so many ups and downs that people were finally ready to get out and with vengeance, and that's when they did. They started pouring out right here. Even though we have these consolidation levels, this is a massive drop. These gaps, week-to-week gaps over and over again, that's pretty bad. And then going down steadily here. So the psyche of people that own this stock is not good right now. You think of the psyche of people that own this stock in the past couple of years, everybody wished they had that stock. It was the number one stock everyone wished they bought into earlier, because it's one of the craziest stocks I've ever seen in my life. Now, I've seen stocks go up and go down and all that, but I have never seen a stock move like Tesla. Tesla is the textbook example of a mania. It's insane, which is why you have this kind of head and shoulders looking pattern right here. With this exact amount of up is what we're getting to the downside, because the people that brought this are finally getting out. So this is the time to, no, I'm not saying like buy stuff right now or do anything. I'm saying make your own decisions. But I'm saying at this point, when you start buying in at small amounts, drops don't hurt that much. And eventually it gets to a point where people are just tired of selling it. The sellers don't exist anymore. They haven't gotten to that point yet, because there's just so many people in this stock. This was one of the craziest stocks ever. Look at the volume on these pumps. I mean, this was a massive amount of volume towards the end of 2020 when we had this big pump right here. 2019, 2020, that's insane. That changed the stock forever, because after that is when all the craziness happened. So that's where we're at now. We're just at a point where things are much more reasonable. I'm buying dividend stocks, like, for example, Visa. I think I talk about this quite a bit, but it's a great example of what's going on, because Visa is paying the same dividend, but it's half the price. If you look at this chart for that goes back years, I mean, you can see that this stock traded in this kind of between 40 and 60 range for quite a while. See, like right here, this range held up for years. Each one of these lines right here is a year. So you're seeing year after year, it was kind of in here and it was paying its dividend, but the dividend was increasing. It's increased the dividend consecutively for the entire history of the dividend. So it's a very well-loved stock for that reason. But look at the performance. It's been very sideways in the long term. It does have some upward, I mean, if you look at the standard deviation channel, it's going up. You can see that it has trended in that direction, especially over the past couple of decades. I mean, look at how it was low down here. When was this? 2010. So yeah, after all the 2008 craziness, which they got caught up in, and cell phones were looked at in a different way at that time. So this was a whole different business. I mean, it really wasn't, but it was in some ways. Now we've had all this progress, and the market has pulled things down unfairly. Verizon is the same company it was up here, and it's paying the same dividend, but half the price. So basically, I can get 2 shares of this for every share I used to be able to get, which is amazing. Because if the market goes back up, and we're in this range of high volume, there's a good chance that it comes back to this area, this point of control, which is where a lot of people are in. I mean, my average is actually above this. I'm up here in like the low 50s, because this was a good deal for me. Every time I saw this thing dip down into the 50s, I picked it up. If you look at the pandemic drop, it didn't go down that far, and it got bought up quickly. So I thought, man, this is lower than the pandemic drop. This is amazing. This company is, to me, another really good example of something that's unfairly priced. And the lower this thing goes, because as the market has continued to drop, this is still staying in this range because it's already so low. There were just too many buyers and not enough sellers to keep that action going around the market. So I think even if we do go lower, these things are going to eventually catch the market and spring it back on itself, because but most of the bad stuff will have been wiped out by that point. So we're seeing this changing of the guard in some ways. This is kind of the thing that needs to happen in a healthy market. And the fact that Verizon has dropped like this, and yes, there are issues with every company. It's not just everything is exactly the same that it was up here. But I mean, the business that it does, all the resources that it has, the buildings, the staff, things like that, the way they do business, the way they invest, their finances, all that stuff. It just tells you that it's a better environment to get some of these stocks. So I like the fact that people are kind of saying the same thing. I don't think we've bottomed, but we may be close. I mean, that's a good sign of people willing to buy this market. And it's not just a small crowd of people. It's a significant amount of people that do that. So I don't know which way this thing is going to go. I don't claim to know. My gut feeling is that we're going to have some sideways action, and we might have an upward trend or a downward trend. But I think what we're going to have is some pops that look like the bull rally is starting before they actually do. Because every time we start to go up, in fact, let me get the SPY going from these last few pumps. Since we've had a few pumps this year, the SPY usually ends up coming back down on itself every time in the direction, because things squeeze and they have to come back to reality. And once they're back at reality, they have momentum from one direction or the other, so they continue to go, which is why we've been going below and above this point. We kind of hit this point where things seem a lot better, where people are much more comfortable changing hands. When people are much more comfortable exchanging shares, that's what I'm looking for, that's when you start getting support that holds the market up for the next rally. Right now, we've got this area of uncertainty, so I really want to see what happens tomorrow. I'm trying not to make too many predictions, but my guess is as we see more of a trend, we'll still see some sideways action that make it confusing. People will be confused as to what's actually going on, because they're going to see these massive down days and think that the market is dropping more than it is. Because these months where it was going up consistently, there wasn't as much hype in that as there is the hype of the downside. When things are going down, that's all you hear about. So it sounds like we've done nothing but drop this year, which we have in some ways, but you can't negate these rallies right here. And these rallies are just a relief of pressure. And as you can see, there was a definite agreement that these areas were the wrong areas to be as far as price. That's why we moved so quickly, because everybody knew we were overvalued. The thought was here, is this the top? Is this the top? Is this a top? Is this a top? Is this a top? So as we're coming down, it's the same thing. Do we need to take our gains? Because that was a top. This is insane. This is overvalued. But as we come down here and the sentiment starts to be, well, maybe we're getting close to a bottom, then that's a disagreement in what it's worth, which means the movements won't have as much firepower. If the bulls and the bears both agree that the price is wrong, like the bulls and the bears both thought that it was too high up here. That's why it dropped, and it dropped the way that it did. Some of it was people getting stuck, but a lot of it was just the fact that they knew, because the bulls were getting out so quickly that it was dropping the price before the next seller could let their shares go. So they would have to get ahead of that and trade faster than everyone else, which then speeds up the entire market over time. But as we get to this point, we still get that high speed, but we're not moving in consistent chunks like we were back here. So that's why I'm waiting for a catalyst to come out and tell us which way we're going. So I'm sensing sideways action until a catalyst. And then we're going to have reports. We're going to have a Fed meeting coming up. We're going to have another earnings season starting, which means more predictions and more numbers from the previous year that we thought were going to be down. So that's why I think the earnings is going to be a difficult thing to judge as well, because we've changed levels since last year. So are these earnings projections more on with what we're actually seeing, or are they too low? Because they could be too high, they could be too low. We won't know until we start seeing the data. So, and the other thing is we're waiting for the CPI. So that's really the big thing. The big mover is going to be the next CPI, just like it was last time, because that's what's holding things back right now. The Fed and the CPI are the two main drivers of the market. And people that are denying that are not looking at the situation. Yes, there's all this other stuff going on and you can go down crazy rabbit holes. But at a fundamental level, the Fed and the public are kind of doing a little dance, and they're trying to figure out where the market's going to be. So the Fed wants to think, how does the market feel about this? How do we have to talk to the market in order to get it to do what we want it to do? It's not about crashing prices. It's about getting the market to correct itself. That's the beauty of this financial system. It's crazy, but it has the ability to correct itself if you get the right information out at the right time, which is what it's trying to do right now, what the Fed's trying to do with the public. They're trying to convince the public to be just bearish enough to get prices down, but they're not trying to convince the public to be so bearish that we crash the entire economy. They're also trying to keep the public from being too bullish, because as we pump like this, we have way too much volatility. We have way too much risk being taken on. And we also have a slowing market. So all the people that are getting caught in this are going to get crushed more and more. And they're going to be less likely to come out and buy in the future. So that's the other reason why you see more movement around this section, because certain people just don't want to touch it anymore. They've been burned already, so they're not willing to do what they were doing before. That's another good thing with the markets, because then it keeps that gambling behavior at bay as much as it can. There's always going to be gamblers, no matter what the conditions are. But if you can keep that at bay to where it doesn't get things out of control like it did before, then you can have a much more peaceful market. You can have a market that moves in line with expectations, and inflation stays at a point where it's beneficial and not detrimental. Because that's the thing. Inflation is both the good and the bad of the system. Inflation is what keeps you in the game longer without having to do anything. If you hold assets, they inflate with everything else. If you're just holding cash, you only have the value of the cash at that time. As inflation goes up, the value of that cash goes down. So it doesn't benefit you, whereas if you're holding assets, it does. So inflation is good in that sense. But if it works too quickly, it means you can't afford to go to the store and buy groceries, which hurts everything. And we have to get to a point where both of those are stable, where things are affordable and we still have a decent labor market. We have a good continuation of earnings and estimates and everything, so that the market can turn around. But whether it's going to do that anytime soon or not, I don't know. The Fed is talking about holding things for a while, and they're not talking about pivoting yet. But here's the thing. We went from the Fed not knowing how far we were going to have to hike in this. This was all, how far do we have to hike? That's the main reason we're going down, because people are like, oh man, we don't know how high this has to go. But then as we got down here, we started to slow down how we thought the thing was going to go. And we did our first 50-point increase last time, which after four 75 basis point increases, I forget, 3 or 4 of them, a 50 was a big change of pace. And a 50 is still a big increase. We've been moving a lot, and people are just so used to the low interest rate environment that they haven't seen what happens when things actually move. So when you get these movements, you're going to get confusion everywhere, and we're still figuring that out. So as the Fed decides that it wants to keep the market lower or move it higher, whatever it is, we're going to have to reprice everything and figure out a fair value for all this based on what the Fed says money can be loaned at. Because a lot of the money that pumps things up is borrowed money. So if you take a bunch of borrowed money and you stack it on more borrowed money, you get this. But then when the loans are called, that money just disappears and people go insolvent. People go bankrupt, and the system that wasn't built on real assets is what crumbles. The system that still has assets stays, and that's what we're waiting for. Because our system is based on being able to do things with money in, let's say, a fantasy land, so it doesn't hurt people in real life. Whereas originally, when you had the barter system, you had to have real thing for real thing. And if there was a problem with one of those things and the trade wasn't equal anymore, then there was a problem for you. But with money, you have a way where that can go on in the virtual world and not have to happen in real life. So that's an improvement from that. But it's still not a perfect system. And we're still figuring out how to use it, and people are figuring out how to exploit it too. We're also trying to figure out how to stop them from exploiting it. So it's this crazy world. We have all this new technology. This is a whole different era than it was even just a few years ago, because the mindset of people has shifted and the way we do things is different. For example, I was thinking about the fact that we have all these open jobs, right? We have such a tight labor market, and we have, I want to say, like 4 million open jobs or something like that. There was some metric I was looking at the other day, but I was thinking, well, a lot of the stimulus has come and gone. The insurance and all that has come and gone. So why are people still not back to work in some of these jobs? And my thought was, it's probably because they've moved their careers online. They've become content creators or something like that. So things like YouTube have changed the way that society functions. You can actually make money by going on these platforms and just creating content. If you get enough views, then you get a little bit of money for it. And at a certain point, it's worth it to make content, because you can make the same doing that you could doing some other job. So these businesses are going to have to start raising the rate at which they pay people to get people in the door. So my thought is, people have been talking about automation taking over everything for a long time, but it hasn't. So it's like, why didn't it happen, back in the 20s or whatever, when we had ridiculous technology? And I'm talking like ridiculous good technology. We had technology to solve all our problems at that point. I mean, not all our problems, but more problems than we did, but we didn't. So I lost my train of thought, but I'll come back to it at some point, because I actually had a point sitting in there. So let's take a look at the year. We've come down. I think we're a little bit closer to fair value than we used to be, and people are uncertain as to where that is, but they're willing to bet that it's close, so they're not going as crazy with the selling. And some people are starting to look at what they want to buy. I mean, I've been looking at what I want to buy for a while, and I'm loving that the upside is so cheap. The downside is still somewhat reasonable, because there's not this all-out panic, but it's still expensive. But the upside is actually really good right now. I mean, I'm getting contracts for, like I said, $10 to $20 that used to be in the hundreds, and they still have a ridiculous amount of time on them. So I'm thinking, hey, I can risk $20 and it makes so much off of that. I don't have to have very many of those contracts, so I can keep my risk low. If I just have like 5 or 10 of those contracts, that's enough to turn into an obscene amount of money if things really go well. But at this point, it's not that much to risk. And I have a good enough amount of time that I'm not worried about that in the long term. In fact, I'm looking at even buying even farther out, so that I can keep the play going until it either succeeds or I've decided that I don't want to do this anymore. But that's kind of my mixture right now. I'm buying some stocks. I'm buying some options. I'm buying a few shorts. I'm buying shorts. I'm shorting some stuff just because I still think there's some downside, and I don't want to be caught completely long, because I'm a little bit more long than I would like. But if we do turn around, this is the kind of direction I want to go in. Not as far as I would have liked to have gone if we do go, but I'm a little more exposed than I'd like to be to the long side. But I still think that's a good way to go at this point, because even though I know I'm getting crushed all the time, it means that the stuff that I really like is not dropping as much as it used to, and it's becoming more and more attractive. It's the thing that I always want myself to do when I spend years in a bull market looking back at the charts. But when you're in it, it's not easy to do, because you think, what if this is different? It's like, yeah, I know the odds say that it's not going to be different, but what if it is? Because there is always the chance that it might be different. Nothing goes on forever. There's always a change at some point that completely derails the entire thing, and you get a whole new setup. So could that be right now? Could we be in the midst of that, like some people think we are? I don't know. Or could it just be a regular old turnaround, and it's just going to be longer than we think? It's still going to hurt to the long side if it continues to go for another year, or a half a year or 2 years or whatever it is. So that's going to be terrible, but I'm not long enough to where it's going to kill me. I'm willing to take that pain on good stocks, because chasing the thing while it was going up led me to believe this was the better way to go. And who knows, I could be wrong. I mean, I could do a stream in 6 months. I could quit streaming because I hate it so much. But I could do a stream in 6 months saying, oh, this is terrible. I wish I hadn't done that. I'm ready for that. That's why everybody has to make their own decisions, because this is the market. This is real life. Nobody knows. You have no idea what's actually going to happen. So the best you could do is just look at things for yourself and try to decipher the best you can, because it doesn't really matter how right you are on something. The market can act rationally or irrationally around that, and you never know what's going to happen. So when you get these chances, it's better to grab them while you can than just let them go, because when you're trying to chase, that's when you really get crushed, and that's when you give up on the markets. Not to mention, I actually like buying stocks. It's nice to go in and take a look at the stuff. When it's buying time, I think, all right, this is great. I sit around shopping. It's like I'm playing a video game or something. I have fun doing it. I mean, it's not like I'm playing a video game. I'm not trying to add to that gamification of stocks thing that I'm tired of hearing about. But it's more like you're enjoying what you're doing the way you would enjoy playing a video game, because it's something real to look at. It's like a lot of games, you're looking at stats and stuff anyway, so you might as well translate that to something in the real world that actually makes you money, which is why I like doing that and finding good deals and getting them on the days that hurt. That's how you that's how you survive those red days. When you see things going down, 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 if you were able to either buy or plan to buy more or just do something around that stock that was positive, it keeps you going through those times. Yes, you're going to lose money, but that's what happens in a buyer's market. You just have to eat that side of the coin. It's going to hurt. But yeah, that's life. If it didn't hurt, it wouldn't be worth it in the long run. At least that's what I want to tell myself, because it could be easier, but it's not. So this is where we are. Do you want to sit there and actually make something out of it, or do you want to just let it go? Because when you let it go, you get really mad at yourself later on. And that's not a mad that stops. Like, you continue, because you never get those levels again. You look at stuff and just go, oh man, I could have had a little bit of that, would have gone a long way now. So that's what I'm trying to look at with this. Eventually we'll have some kind of turnaround. And if we don't, whatever, then we have other problems that are much bigger than that, and this won't matter anymore. But at some point we'll have a turnaround. And whenever that turnaround is, I want to be ready for it. But at the same time, that's why I still have some shorts on, because I do think that there's going to be more downside, even if we have a sideways trend for a while. I want to make sure that if we get a big drop, I can take some profit in that and move it either into cash or into some of those long positions for a bounce after that. And it's like, well, is it always going to bounce? I don't know. But betting against the thing eventually bouncing never works in the entire history of the chart. So why fight it now? Because it's never different, right? Maybe it's going to be different someday, but it's never different. If it's different this time every time, then you're the one that gets blown up and you don't have any money eventually. Does that mean that we're going to go straight up soon? No. We're just going to have one hell of a bumpy ride coming up pretty soon, because we're around this area where a lot of people bought in. We have reasons for people to want it to bounce or for it to go down. So the volatility is going to be high, and I'm excited about that. So I've been rambling for quite a bit. I'm going to get out of here. I'm a Stockalypse. I do this every other week, Sundays at 3 p.m. Pacific. Talk about stocks, options, and crypto. What I've been watching and what I'm looking at for the next couple of weeks. Hope everyone protected themselves in 2022 and is ready for 2023. No market tomorrow. The market opens back up on Tuesday. Be careful, and let's make some money.